Hi everyone, this is Greg Munroe with Munroe Morrow Wealth Management. I wanted to give you a quick update on the markets and where we think things might be going. I wanted to start with one of my favorite quotes from my career from a guy, an investor named Charles Ellis. He said, in the short run, the stock market is very interesting and extremely deceptive. In the long run, it's intolerably boring and reliable. Again, in the short run, it's very interesting and extremely deceptive. In the long run, it's intolerably boring and reliable. My career is indicative of this. Over 27 years of doing this, the Dow Jones has gone from 3,000 when I started to 22,000 27 years later. If you just bought the Dow Jones Industrial Average 27 years ago, picked your head up 27 years later, that rate of return when you include reinvested dividends is 9 to 10% per year, which is fantastic. The reason why most people don't enjoy those types of returns is they get scared out of the markets every time there's a decline. Now, within that 27 years, this is the third major decline. The first one was in 2000 to 2002, where the stock market went down 50%. The next one was 2007 to 2009, where it went down 60%. And this is the third one, where we're down about 35% thus far from the top to the bottom. Here's the good news. We always get through these things. We'll get through this one. Warren Buffett always likes to say, the worst bet you can ever make is to bet against the U.S. economy. What's going on right now is temporary. This virus will eventually get contained. And when it gets contained, the economy will slowly start to come back. And the stock market might come back quite a bit faster because stocks lead before the economy comes back. Stocks tend to go up first. The economy then slowly comes back second. That's the good news. We're going to get back on track eventually. The bad news is that in the short run, stocks have a tendency to go down more than you think they would. And in the bottoming process of the stock market, you usually have to what we call retest the lows. So it usually goes like this. You have a huge decline down like we've had. You then have these relief rallies where like a day like today, things are up. And then you go back down again in the short run and potentially even go down to lower lows. Nobody knows if that's going to happen. We could be at the lows now. No one knows. That's why the stock market is so deceptive in the short run, as I started with. But what you need to do during a time like this is not get faked out in the short run, not get faked out. So it's going to be a slog here over the next few months, and things might go to lower lows. But that really doesn't matter if you have long-term plans and long-term investments. All of the plans we put in place for all of our clients have you having enough cash reserves or short-term money to get through the next 3 to 6 months, and your long-term money is for your long-term investment objectives. So if you wait this thing out, slog through, don't get faked out, because in the short run it could get worse before it gets better, inevitably things are going to come back and you're going to be in great shape. So that's the message today. Don't let the short term fake you out. Could get worse before it gets better. Most likely it will. But if you hang in there, things can come back. And when they come back, they can come back fast. So again, remember, no panic, no sell, no lose. Hope you have a great day. Thank you.